Hello everyone, good morning. Hello everyone, good morning. And for those of you who are tuning in from a different time zone, I wish you good afternoon and good evening. So today we are delving into the final trading day of the week, and of course it makes things a little bit interesting, especially considering the fact that the US dollar has been on a strong bullish momentum since last week. Only for about a couple of hours ago we begin to notice a little bit of a descent in price action in that asset, and this could be attributed to profit-taking activities ahead of the weekend. Of course, we are going to be looking into the nitty-gritties of what might be causing this decline in the US dollar today, and what are the chances that buyers can still come in, or is this the beginning of a sell-off into the weekend. Beginning of the week, we have been monitoring three financial instruments, which includes the USDJPY, the USOILSPOT, and of course the XAUUSD. So today we are going to be looking at how well this asset has performed through the course of the week, and how we intend to strategically position ourselves for today's trading session. So if you're a fan of any of these assets, you want to stay tuned in, as you don't want to miss out on the ideas I will be sharing today. And for those of you who are joining me for the first time, you're highly welcome. My own name is Sheriff Daramola, and for the next 30-40 minutes I'm going to be here with you as we together looking at things from both technical and fundamental perspective. And I also encourage you to actively engage in the comment section if you have any questions as regards to what we are talking about, or general questions as regards to what have you, feel free to drop them in the comment section. I'm here and willing to be of help in that regard. So with that said, here we want to delve into the market. Let's see what is going on. And before we do that, you know how we do it, of course. The first thing we want to be looking at is how the US dollar market dynamic is behaving. What is the sentiment looking like in that particular market, and what are the chances we have as buyers or sellers for today's trading session. Now, in the US dollar market, if you would ask me, I will say that the US dollar remains fundamentally strong due to the sticky inflation we saw, resilient growth in the economy, especially around the labor sector, and of course, hawkish tone and warning rate cut expectations from the Federal Reserve. And if we look at the economic calendar, you will see that since the beginning of the week, the data coming in from the United States has been a little bit of resilience. For instance, the week started with the consumer price index, remember, where we were looking forward to inflation still consistent in the United States. And of course, we saw how the data came in just as market had expected. We saw a 0.3% for the month over month, 2.7% for the year over year, which was slightly higher than the previous month. Then we also saw a bunch of Fed official speeches, Barkin, Bowman, Collins, Logan, and from all they are saying, they continue to highlight the fact that the tariff situation will continue to drive inflation, and as a result of this, there will be no rush to cut rates, citing sticky inflation and strong labor condition. And of course, this has been a major factor driving the strength of the US dollar. Then we went on into Tuesday. The producer price index came in, though a little bit lower than what market had expected, but we can still say that inflation is still very much there. Then yesterday, Thursday, July 17th, we saw the initial jobless claim count, which is a labor-oriented data that gives us an idea into the number of people filing for employment, insurance, and benefits from the state government. And of course, the lower this data, the better it is for the labor sector. And look at what we saw here. Market were actually expecting a 235,000. That is, they were expecting the figures to be higher than the previous month. But what we saw was quite impressive, a 221,000, signaling a healthy labor market. Now, if we add this to the strong figures from retail sales data, we saw the retail sales data coming at a whopping 0.6% expansion as against the expectation of 0.1%, and far ahead of the previous month, which was at a deficit of 0.9%. Now, this figures we're seeing here, this robust economic data from the United States, continues to strengthen the Fed's hand and dampen any expectations of rate cuts anytime soon. And of course, you know what this simply means. The dollar will definitely thrive on this, as investors will move their capital into the dollar as a safe haven. And due to this, we've seen rate cut bets decline in the last 2 weeks now. And this repricing is positive for the US dollar, especially against yield sensitive pairs. Now, if we go into the US dollar index chart, that is the DXY. For those who are new, who don't know what this chart is all about, well, this chart here gives us an performance overview of the US dollar across major assets. And whatever we see here tells us how the US dollar is performing. Now, remember, 2 weeks ago, we talked about the fact that the price of the US dollar had finally broken out of the resistant line of the descending channel right here on the 4 hours time frame. And in the last 2 weeks, we saw how price had consistently and uniformly found higher highs and higher lows, resulted into this new ascending trend line that has been supporting the price of the US dollar since the beginning of this month. And you know how we use our ascending trend lines. Of course, as long as price remains above the ascending trend line, we'll continue to look out for patterns and structures that support buying idea. Now, yesterday we saw a little bit of choppy market condition, and despite the fact that we saw a little bit breakdown of that ascending trend line, we saw a sharp rejection. Price went back up, and as of this morning, we can see that price is back into the trend line once again. Now, the question here going into today's trading session is, will this trend line become a platform again to send price climbing higher? Situation where this trend line will be broken to the downside. And if we consider the fact that we are on the final trading day of the week, this bearish move we saw here in the last 12 hours could be as a result of profit-taking activities. Now, from a fundamental perspective, there has been some geopolitical clarity from the United States. Remember, during the course of the week, there was this tension around the president of US firing the Federal Reserve chairman due to the persistent call for interest rate cut, which is yet to accept in the meantime. But in the last 36 hours, we had Trump denied any form of plan to fire the Fed chairman, reducing political risk noise in the market. And of course, the trade optimism with China, India, and Indonesia also reduces safe haven demand elsewhere, supporting the US dollar at this point. So for me, I still think the dollar still has the potential for climbing higher, except for today, that we're looking forward to another high impactful event, which is the publication of the Consumer Sentiment Index by the University of Michigan. And if there is any surprises here, so for instance, let's look at this. Last month it was 60.7, and the expectations now is 61.5, so it's a little bit higher than the previous month. Now, if the data comes in higher, it could be another opportunity to confirm the resilience of the US economy, and this could drive the price of the dollar higher. But if it comes in lower, we may see continued profit-taking activities that might lead into price breaking down that ascending trend line to incite a sell-off back into the resistant line of that descending channel. So for me, we are at a critical juncture around the US dollar market dynamic at this point in time. Now we shall be going into the asset we are monitoring for this week to see how the dollar is influencing this asset, and of course using the information we have around the US dollar market dynamic to strategically position ourselves for the next move. So moving in, the first asset we are going to be taking on, I'm not sure if there are any questions in the comment section. Let's look at the comment section. Okay, no questions yet. All right, so let's move right into the chart, into the business for today. And the first asset we are taking on, as always, is going to be the USOILSPOT. And of course, what an impressive decline we saw in spot this week, though we were mindful of the ascending channel to incite further sell off. Now, I would like to extend this support line a little further. And one thing you would notice here is it appears that price is back into the structure. So after breaking down the support line, we can see that price is back into the support line again, making it a crucial juncture at this point in time. That's around the $66.80 level. Now, the question now is, are we going to see price retest the structure, which is a theoretical expectation to incite a downtrend continuation, or will we see price climb back within the ascending channel to continue the uptrend move? So you would agree with me that we are at a critical juncture at this point in time. And of course, if we scale down into our 1 hour time frame, we'll begin to see things more clearly. Now, let's talk about the fundamental factors currently influencing the sentiment around this market. Now, we saw the price of crude oil drop since Monday. We saw it drop 2-3 days into Wednesday's trading session before we saw higher lows at this point. Now, the decline was as a result of the U.S. economic outlook, of course. We saw how the U.S. economy has been resilient, and which has, of course, been favoring the U.S. dollar, right? And one thing we do understand about the U.S. crude oil is the fact that it is a U.S. dollar denominated asset. Now, because it is a U.S. dollar denominated asset, whatever happens to the US dollar definitely has a significant influence on the US crude oil. So what do I mean by this? If the dollar rises, which it has been doing in recent times, US crude oil becomes very expensive for other currency assets to convert to and buy. So if you want to buy the US crude oil, you would need convert your yen into the US dollar. You need to convert your euro into the US dollar. You need to convert your pound sterling into the US dollar. And by doing so, considering that the value of the dollar is very high, you will be paying more to convert to the US dollar, and of course more to buy the US crude oil. And what does that mean? Demand for this commodity will drop because of it's being expensive. And if it drops, what happens to prices? Price will continue to decline. And this could be this decline we saw here between Monday and Wednesday could be attributed to this. Then another factor that has also influenced the decline is the high inventory report. We saw from the API and EIA reports that inventory rose more than market had expected, capping the bullish momentum that started this week. And of course, if you would ask me, we are at a limbo right now where you will see here on this chart that price action remains within a range bound structure around that the support line of the ascending channel in the last 4 to 5 hours, further emphasizing the indecision at this point. Will price drop to the downside from here, or will it climb up to continue an uptrend? We don't know yet. So, and if we consider the other factors around the US crude oil, it appears that this might be a platform to continue the uptrend scenario. Why? Well, there is easing US-China trade tensions right now. I think they're beginning to strike a balance. Trump just lifted the AI chip ban on China and struck a trade deal with Indonesia while expressing hope for agreement with India and Europe. And of course, when there is lower trade friction, it improves global growth prospect, and by extension, oil demand outlook is very, very possible. And besides that, we also have the resilient demand from major consumers like China. China recorded an increased crude oil imports in June. It surged by 8.5% in June, pointing to a robust demand from China at this point in time, which is a very, very good signal for buyers of the US crude oil. So we know China is the largest importer of crude oil, and if their imports increased, what that means is that means there's resilience there, and there is hope that that economy will continue to import more oil, increasing the demand for this commodity, and of course price will rise as a result of this. Now, if we take all of this into account, how is the market digesting this information? What are they looking at this juncture to trade the US crude oil? Now, for me, I want to capture this range bound structure we see here. Look at what has been going on since 1, 2, 3, 4, 5 hours. The market has been consolidating, and not just consolidating at a crucial juncture around that support line of the ascending channel we identified on the 4 hours time frame. So to make things clearer, I will scale down into the 15 minutes time frame, where I do want to capture that range bound structure. But before I do, let's acknowledge this uptrend scenario here. Remember, we were able to capture this bearish move on Wednesday. Let me share that with you for those of you who missed out on this. So on Wednesday, this was what we were looking at on Wednesday's trading session. Prior to the beginning of Wednesday, we acknowledge a range bound structure, remember, between the $66 area and of course the $65.30 level. And if you remember, I already had a buy position prior to the beginning of that session and had my stop loss below the $65.30 level. Unfortunately, I was taken out of that buy position. But remember, we also said that we will consider selling the breakdown retest of the $65.30 level, which was exactly what happened about 2 to 3 hours into the New York session. And of course, we saw price move approximately 90 pips before that bullish move happened. And for those of you who captured that opportunity, well done and kudos to you. And since price dropped into the $64 area, we saw how in the last 48 hours the price had consistently found higher highs, higher lows, higher highs, higher lows, giving us signs that it appears we are seeing a rebound in the price of crude oil. So going back into the 15 minutes time frame, I want to acknowledge that higher low here, and by doing so we will be marking out a trend line which we are going to be using going forward. And you know how we use our trend lines. As long as price remains above them, we'll continue to look out for patterns and structures that support buying ideas. Now, if this is going to be the case, look at what we have here, higher lows. Now we have a higher high ongoing, and we may likely see price retrace back into the ascending trend line to continue the uptrend scenario. Now, that is one scenario I'm looking forward to. Now, let's look at the whole consolidation going on here. So if we zoom into the last 5 to 6 hours, we have something to work with. Support line here at the $66.30 level, right? We have the $66.30 level somewhere right here. So I will just $66.30 level just right here. Let's give it a dark color instead. And hold on a second. And then we have the resistant line at the 66.90 level. Okay, 92 cent level. So it's just more like a 66.90. That's 60 cent range bound structure we have here. So 66.92. Okay. Now we have a range bound structure, right? In the last 5 hours, price has remained confined within this range bound, and then around the $66.50 area, just right here, we can see another structure around there. So I will mark out that structure as well, and let's dissect how we will position ourselves for the next move from here. So now look at what has been going on. We had from a larger perspective, we have a wider range, But you will notice here is the inability of sellers to break through the $66.30 level. We saw that happen here. We saw that happen about a couple of hours ago. And for this fact, we want to consider this as a robust demand zone that may likely push price higher. Now, with this situation leading to the breakout of the $66.50 level, a possible retest of this structure could trigger the next buying opportunities in this market. So I'm looking at, we have no other choice than to exercise patience here, and let's see how the market is going to play out from here. It's a simple trading setup we are looking at this point in time. But if it happens that the this $66.30 level is broken to the downside, and then we can begin to consider selling. Now, if I'm going to sell, I want to wait for confirmations to happen, like a breakdown, retest of structure before I jump into a sell. If I don't see a retest of structure, I will pass that trade and let it go. So I will sell only the breakdown here and then join the bearish move. Now, there's a caveat to this bearish setup here. If price drops below the 60 level and we get a trigger, as soon as price gets into that ascending trend line that we marked out here, that's about 60 pips from that entry point. As soon as price gets into that structure, we move all our stop losses and secure the sell position, maybe about 20 pips. Since that's a 60 pips move from that level into that area, maybe about 20 pips, or move it to break even, so that worst case scenario, if price reverses, it will be at break even. Now, the reason why I said we should move our stop losses is simply because as soon as price gets into this trend line, we want to wait patiently to see how the market will react to the trend line. Now, remember I told you, if we have an ascending trend line, as long as price remains above them, we will be looking out for patterns and structures that support buying ideas. So if price comes in here, we may likely see the beginning of another wave of bullish momentum. So we want to be mindful of that. So if price comes into the structure and we begin to see buy pressure, that is, sellers are finding it difficult to break down the ascending trend line, then we want to get ready to buy, maybe at the emergence of a double bottom structure, inverse head and shoulder pattern, or a falling wedge. Whichever case the reversal pattern will be, we buy the breakout of the structure and join the uptrend. So that is why I said we should move all stop losses. Now, if that's the case and instead we see price action break down that ascending trend line, retest it, then we have no other choice to prepare for more selling ideas here. Maybe add more selling positions to the existing trade. So that is how we are going to be managing any form of sell expectation around this current market structure. So let's indicate that right here. So we sell the breakdown, retest of the structure only, right? Okay, so I think I'm not sure why that is not okay. Finally it comes up. So we sell the breakdown, retest. I'm not looking to add more sell to this position because of the fact that it is an uptrend scenario in the last 48 hours. So let's see how the market will play around here. If there is anything new that comes up as we continue to monitor price action, I will definitely update us on my Telegram platform. Now remember, please, consumer sentiment index is coming in 2 p.m. We may likely see some volatility come in prior to that time, so we should be very careful. So as soon as we are in profit, let's ensure we move stop losses and secure whatever position we have. So that is my simple view into this. Let's see how the market will play out from here. It's unfortunate I missed out on this buy, so we have no choice than to wait and see if the market will give us a second chance by coming back to retest to continue that uptrend. So there you have it. If you have any questions whatsoever, feel free to let me know in the comment section. It could be you want to ask for clarifications or anything. No question is insignificant, so please let me know in the comment section. So I'll take about 5-10 seconds off. Let's wait and see if there's anyone who wants to ask anything before we move on to the next asset on our watch list. Stay tuned. So I see you, Jonah Aruna. Good morning. How are you doing today? I'm glad to have you here. Okay, everyone. So no questions yet. So I guess we are all on the same page here. And please ensure to mark out the structure accordingly as we have discussed. And hopefully we will be able to close in some profit again this week on the USOILSPOT. So I wish us all the best of luck on this one. So moving on to the next asset on our watch list. So the next asset we are looking at is the USDJPY, and what you're looking at on my screen right now is the 4 hours time frame. In fact, this was the setup that's became the foundation of our technical decision around the US dollar for this week. Of course, we captured the character of price action since the beginning of the month to give us this uptrend scenario. After connecting the series of higher lows, we had a beautiful ascending trend line, and as long as price remains above the ascending trend line, we have no business selling that particular asset. And to make things a little bit easy for us, we had our key level at the 146.00, and the week started right here. We were even thinking that price may likely come back, retest the trend line before it moved at the beginning of the week, but that did not happen until on Wednesday's trading session when we saw that move happen before it went up. Now, when we scale down into the execution time frame, that is the 1 hour time frame on Monday, we were able to identify a simple trading setup. Remember, we saw this old scenario where price was confined within a range bound structure for about 12 hours thereabouts before we finally saw the breakout of structure, and this was our first entry for the week. We were able to capture the breakout retest of that resistance line here, and of course we saw price move significantly in our favor, about 150 pips move before that bearish situation we saw here on Wednesday. Now, prior to the beginning of Wednesday's trading session, remember, for those of you who are with us here, we talked about a new trading setup. We had a beautiful range bound structure here as well. Price was confined within the 149 and 148.9 prior to Wednesday's trading session, and we were looking at price either breaking out the resistance line to give us buying ideas, which never happened, and we said if price breaks down, retest the support line, we will be joining a sell. And look at what happened. That was exactly what happened on Wednesday. We saw price drop significantly, over 150 pips move before that uptrend scenario happened. And for those who were part of that move as well, well done for staying faithful with our analytical approach. And of course, by now you must be out of that trade. As you all know, when price moves significantly in our favor, we move our stop losses and secure some profit. So if you had done so, well done, kudos to you. Now, going into today's trading session, the USDJPY is still trading very strong. In fact, it has gained over how many percent now since the beginning of the week. Let's look at it together. I think hold on a second. Okay, so from here to here, it has gained over 0.7% beginning of this week, which emphasized the strength of the dollars, the strength of the US dollar, and of course the uncertainty in Japan as regards to political uncertainty, where polls showed that the LDP coalition may lose majority in Sunday's upper house election. So this week has been more of political election scenario in Japan, and this has raised concern about fiscal stability, making the yen vulnerable to more selling. Then we also had some disappointing figures from Japan as well during the course of the week. Let's look at the figures here. So we saw some trade data here. We saw Japan's June trade was weaker than expected due to a surprise contraction in exports, highlighting potential cracks in the export engine. We saw total trade balance came in at a deficit of 153.1 billion, which was way below the expectations of 353.9 billion. Though the contraction was expected, but it was never suspected to be as low as this. If you look at the month of May, we saw a whooping 638.6 billion. Now look at what it has dropped to, 153.1 billion. That's about 75% drop, which is very, very, very massive, and this is not good for the Japanese yen at this point. Now we also saw concerns from local banks in Japan too, as well as regards to Japan's credit rating, especially with the looming political shift and fiscal pressure as well, which is also not supporting the yen at this point in time. Now, for me, I continue to think that the path of least resistance for the yen still remains to the downside here, and the dollar may want to continue to take advantage of this. And for the fact that price still remains above the ascending trend line, we have no other choice than to look out for ways to buy the USDJPY today. Now, the only condition that can make me consider selling the Japanese yen is only if this ascending trend line is breached and broken to the downside, which is not likely to happen. So for me, how do we intend to join this uptrend scenario here? Now, look at what has been going on since yesterday, the last 24 to 36 hours. I think we have a range bound, right? We have a range bound structure. Where is most suitable to put this? I think 148.4. Yes, 148.4 is looking promising. So let's mark that out. 148.400 level, right? That level had played a significant role in resisting any form of sellers coming into the market. So as soon as price drops here, we see buyers push price up into the 148.8, giving us a structured range bound structure to work with ahead of today's trading session. Now, with a structure like this, you know how we do it. We will exercise patience and wait for price to either break out the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Well, for me, even if it breaks down the support line, I will not be selling. Like I've mentioned earlier, that I will only sell if the breakdown of the ascent. If you're a scalper, you're a short-term trader looking for small pips like 50, 60 pips, it could be something you can look at maybe on your 5 minutes or 1 minute time frame. If price breaks down, retest that structure. But for me, I will not be selling unless this ascending trend line is broken to the downside and of course retested. So with the way things are going right now, I'm going to be positioning myself above the resistance line of the range bound structure. So I will place a buy stop order now on the USDJPY above the resistance line of that range bound structure, and let's see how this is going to play out today. Like we said, the path of least resistance still remains to the upside thanks to a stronger US dollar, which is driven by hawkish remark from the Fed officials, considering the fact that inflation is still very high, and of course the narrative that Trump has denied firing the Fed chairman, also calming immediate fears in the US economy, is also boosting the US dollar strength amidst all of this political noise. So I'm placing a buy stop order above that structure, and let's see how this is going to play out. So if we buy above this area, we want to be having our stop loss below the support line. That's about 40 to 50 pips of stop loss, and then let's see how far that bullish momentum will go. So this is what I'm looking at on the USDJPY for today. I hope I made myself very clear. I hope I made it as simple as possible. But if you have any questions, let's know in the comment section. So I will take another 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in. All right. So I do hope I gave enough room for comments to come in, because I know 0.2 seconds time lag between my broadcast here and you receiving it at your own end. So in the absence of no questions, I guess we are all on the same page, right? And with that said, let's move into the final asset on our watch list for today. So the final asset we are looking at right now is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And what a week we have here on this particular asset. Remember, we've bought this week at some point, we've sold as well, and price has been a little bit messy in the last couple of days. I think I had a couple of losses as well during Wednesday's trading session. Due to the volatility we saw here. So let's talk about what really went on. So at the beginning of the week, we had a range bound, remember, and of course we were looking at buying the 3,336 level, 3,360 level. So we bought here at the beginning of the week, right? We bought here, we saw a 140 pips move before that decline happened. Price broke down the structure here, sold, closed at break even. Then we saw another sell here on Tuesday. Remember, I don't trade on Tuesday, so I didn't take all of this. But for those of you who were opportune to capitalize on that one, well done, kudos to you. Now, during our live session on Wednesday, we had a new trading setup on the 15 minutes time frame, right? I think I still have it. Let's check it if I still have it. I updated us with a new setup, which I told us I will be using to, okay, this is it right here. So this was the setup we had on Wednesday prior to the New York session. And of course, there is a data that was supposed to be released that particular day. Which one is it? Yes, the producer price index. So prior to the producer price index, we had an ascending channel, right? Look at this. We had the resistance line here. and of course we had the support line of the ascending channel right here. Now I said something that day that we have a ceiling which lines up with the resistance line here. Let me zoom in so we can see. So we had a ceiling here at a 3,342, and one of the things we said here is that if we are going to be buying, we would like to see price breakout, retest the 3,342 before we jump into a buy, which obviously never happened until after the PPI data. Now, prior to the PPI, we established a sell position. Remember, we saw the breakdown retest of the $3,339.50 level, and then I did updated us of adding more sell positions to the breakdown of the 3,335, and of course look at what happened here. We saw price move over 170 pips before that bullish momentum came in. I did not take the bullish move. As soon as I got out of that sell and I saw this choppiness around this area, I just left the market and allow the market to play out. And looking at what has been going on here in the last 24 hours, remember I don't trade on Thursdays, it's quite interesting that the market has been looking a little bit choppy. And from the fundamental factors, gold is still looking strong, I would say, but struggling to, it appears it's struggling to sustain yesterday's rebound as we step into the final trading day of the week. And of course, there are several key forces that are shaping the price narrative around the gold commodity. First of all, we have the inflation, which still remains elevated. And of course, we also had Fed officials saying that inflation remains above target, with core goods showing stickiness. Now, persistent inflation could eventually renew safe haven interest in gold, but in the meantime, it supports the idea that interest rate will not be cut anytime soon, which usually pressures the price of gold, pushing it to the downside, which may be one of the reasons why we saw some bearish move in the last 48 hours. Now, with the way things are going, I think that gold has enough room to the upside. For instance, we have the uncertainty around our tariff situations, which is a significant factor supporting the gold commodity. But if we look at the US economic data, which has been robust, this week we saw a good figure from the US jobless claim count. We saw good figures from retail sales data. We saw beautiful figures from the CPI, all of which shows that the economy is still resilient. And right now, it has lowered the Fed rate cut expectation, which could cap the uptrend scenario around the gold commodity. So with all of this put together, how is the market digesting this information? What are we seeing on the chart? Now, for those of you who are with me on both my TradingView and Telegram platform, I did updated us with a new structure this morning. I hope you saw it. If you saw it, you must be in profit right now on that trade. Let me look for that chart again. I think I still have it. Hold on a second. Is it still here? Not this one. Not this one. Okay, this is it right here. So this morning I shared, okay, it was on the 1 hour time frame. Sorry, I shared it on the 1 hour time frame this morning. Time frame quickly, and let's see what I was talking about. So right here on the 1 hour time frame, capturing the character of price action since the beginning of this week. The first thing you will notice is a downtrend scenario. And of course, we can see into a descending channel after connecting the series of lower highs and lower lows, as you have seen here. Now, within this descending channel is a range bound structure. And of course, I indicated here this morning that we will be buying the breakout retest of the 3,342, which interestingly lines up with the resistant line of that descending channel, making a beautiful confluence ahead of today's trading session. And look at what we saw here. Price broke out, and that was where I triggered that buy position you see at the bottom of your screen, which is currently running with a 100 pips, running with a 0.02 lot size. That's about $20 at this moment. And for those of you who captured that move, well done, and kudos to you. So all we need to do right now is to move all stop losses. You know, I'm here to put a stop loss on that position, so I'll be doing that right away. So I'll place a stop loss around the $3,344 area. Let's secure this position while we wait patiently to see how the market is going to play out from this particular area. So move on for those of you who captured that buy opportunity, and let's see what is going on. So from here now, price is gradually approaching another critical level. So let's acknowledge that one and mark it out. Now, for those of us who had missed out on this opportunity that we took this morning, you have no other choice than to exercise patience and let's wait for a new structure to emerge. So we are seeing price approaching another critical level. That's a $3,355 area. And look at, let me zoom it, let me move it to as far back as the beginning of this week. I think even till to as far back as Friday's trading session. Look at this. It's interesting, isn't it? This level was a support line on Friday, as you will see here, support line on Monday, then it became a resistant line here. We saw price break out, then break back down again on Tuesday. Then it became a resistant line on Wednesday, and right now price is gradually approaching that level. Now, you would agree with me that we are heading towards a critical juncture. Now, the question now is, will price break out the structure to welcome new buying ideas, or are we going to see price first of all do some retracement, maybe as a result of profit-taking activity back into the resistant line of the descending channel before continuing the uptrend move? So we have two things to look out for here. So if selling pressure persists around the 3,355 and we find double top structure, we could see price drop back into the trend line before another wave of bullish momentum happens. But if that is not the case and price goes ahead to break out of the 3,355 level, we will exercise some patience. Of course, we want to be buying only after confirmation. Remember, this area had been a strong resistant line in the past. In fact, we can see here that there was a false breakout before price dropped to the downside, and the likelihood of a false breakout is also possible here. So we need it to be a true breakout. So if we are looking for a true breakout, we will want to see price come back, retest the structure. We'll look for this retest of 5, 10 or 15 minutes time frame, where continued buy pressure here shows us that sellers are finding it difficult to break down the 3,355 level, welcoming that bullish opportunity from there. So that is the only condition that will make us add more buy position to that existing trade. So we're looking forward to see how the market will react to the 3,355 level for new trading opportunities here today. So patience is required at this juncture, especially for those of us who missed out on this buy opportunity here at the 3,342. So I think that's what we have here on the gold commodity for today, and I will update us accordingly if anything new comes up, especially as we head into the New York session on my Telegram platform and of course on my TradingView platform. So I think we are good to go here. I don't know if anyone has any questions to ask me before we start rounding off on today's Forex Morning Mastery. And don't forget, if you have found this content helpful and useful in making your independent decisions, why not support the channel by giving the video a thumbs up? It goes a long way in making the algorithm push the video to a wider audience of traders to do more of this. So let's see if there are any questions. I will take about 5-10 seconds before we start rounding off on today's Forex Morning Mastery. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page, right? And it's on this note we have come to the end of today's Forex Morning Mastery. I hope we all had an enlightening session today as we took on the 3 financial instruments I am monitoring for this week, which includes the USOILSPOT, the USDJPY, and of course the gold commodity. And through all of the assets, we were able to identify a simple trading setup that we will be using to navigate the market today. So I hope we all marked out the structures accordingly. If you have done so, well done to you. So all we need to do right now is exercise patience and allow the structures to mature. And for those of you who are joining me for the first time, I do hope this makes a lot of sense for you on your trading journey. If it did, why not join our subsequent editions? Trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach. So the next session will be on Monday, same time, 8:30 a.m. UTC. That's about 9:30 a.m. West African time, as we come here again to start the week on a positive note. And if you're yet to subscribe to the channel, please do right away, as there's going to be some content I will be sharing during the course of the weekend. I will be sharing my ideas on the gold commodity, and of course we are going to be running the Forex market prep on Sunday. We usually prepare ourselves for the new week. You giving me the asset you want me to analyze from both technical and fundamental perspective. Then I'm also going to be continuing the Finding the Trader Within series, which I began last week. So we'll continue that this week too as well. So there's a lot of content to take home this weekend. So if you're yet to subscribe to the channel, please do right away. So it's on this note, I guess we have come to the end of today's Forex Morning Mastery. It has been a great moment with you this week. I really appreciate it. And I want to wish us all the best of luck today. Do have a wonderful weekend, everyone. Trade smart, trade consciously, and do have a wonderful, wonderful evening, everyone. Bye.